What's up, traders? It's time to do our weekly levels. This last week was a very interesting week. I know I say it every week, but that's the time of year. We are in a very volatile time in just about every risk market out there, and this is where traders find opportunity. As we get into the dog days of summer, things will slow down. But right now, we need to be looking at key levels of support and resistance to find opportunity. We're going to look at all the major things that I'm watching to get a sentiment for where opportunity may be in the week ahead. We're going to look at crypto. We're going to look at stocks. We're going to look at some commodities. And we're going to try to tie a few things together to get an idea for where we want to be positioned going into this week. Let's start with cryptocurrency. So we've had a nice 2-week run off of the key level of about 36,000. Now this level comes from the 50% from the last all-time high down to the COVID low. And that's where we did find a bottom for many, many weeks now. Basically since about the middle of this down run in December, I've been watching for this to potentially do a head and shoulders pattern. And this is the relief rally that we're seeing right now. Now, I know a lot of people want to see this go up, but it could just very well at some point stall out and we could retest again. We don't know. But this relief rally was more or less to be expected. Where I get interested in Bitcoin is going to be depending on basically the Ichimoku analysis on the daily time frame. We need to get price into the open part on the bullish side of the cloud, as well as momentum at the same time. So only until we get into the 50s do I actually get bullish. In the meantime, this could just be all we get from the relief rally. So be patient. I know a lot of people have enjoyed some good leveraged opportunities here in this run up, but don't get greedy. Ethereum. It also, in my estimation, needs to conquer the daily cloud as well. We have come back and pegged this resistance here. And what that is basically, if we clean this up a little bit, we see what I like to call 50 inside of 50 setup going on, where from the COVID low up to the all-time high, we pull back to a 50% there. And now on this relief rally, we've also pulled back to the 50% of the move from July up to the all-time high, which we hung out at, confirmed, came down, found support, and now this last week, we kissed it right there. That's quite a confirmation of resistance on Ethereum. So if I had to speculate, we may come back down to test this. That's what this is telling me. So I would be bearish down to the level of support coming into the week. Now, I think one thing we really need to look at is the Bitcoin dominance chart. And this can be a very useful tool to understand the crypto market in general. A lot of people look for what's called alt season. They're looking for things other than things other than Bitcoin, other cryptocurrencies to lead because they're more volatile. They have sicker gains. But in periods of concern and FUD, what tends to happen is Bitcoin becomes the safe haven, the risk off asset in the risk on world of cryptocurrency. And so what you're seeing here is a very distinct rise and breakout of Bitcoin's market cap dominance. Bitcoin, while it is declining in these last few days, is not declining as much as other cryptocurrencies. And I think people need to pay attention to this. Here's how you can take advantage of that. Look on the exchanges that you're trading for the Bitcoin crosses versus the currencies that you like or hold. For instance, something I posted last week, This is the Ethereum Bitcoin cross. It made a short setup that I liked here, where price came to a level. I even made a video this week about the 30-minute fractal patterns that I thought were really cool. If you, say, owned Ethereum and you recognize that Bitcoin market dominance is going up, you could not sell your Ethereum. You could not liquidate it, go to Tether or USDC. You could look to hedge with a short position in ETH BTC, if that's what your sentiment may be. Another thing, let's just look at an example. Here's the Solano Bitcoin cross. Solano has been underperforming Bitcoin, and you can see it in the chart here. You could also hedge your existing Solano exposure by taking a short position in Solano Bitcoin. Just some ideas for you all. If you're getting a little nervous and you want to be a little more nimble in how you're positioned, if Solano goes up, if Solano pumps, then you would make gains, fiat relative gains, in your Solano, and your Solano Bitcoin would underperform. It would work against you, but you would end up with a hedge. You wouldn't have to give up your coins that you want, and you'd be giving up a little of the gains, but you'd be protecting yourself from the downside. I don't think many people investing in cryptocurrency are aware of these things that you can do. But in times like this, you really need to try to protect your capital. There's going to be a bull run in cryptocurrency again. That's just the nature. You need to have as much capital as you can when that happens so that you don't miss it. So that's my message to people when it comes to what they may be nervous about in their cryptocurrency portfolios. Let's switch gears into stocks. This week, for many weeks, I have been watching this down move. I have been operating under the thesis that once every 2 years, we get a minus 10%, give or take, correction in the stock market, the S&P 500, and we got about a 12%. And then what I've been watching for is to see how this move handles the pullback. There's always a pullback. And how price reacts around that pullback is very important. It actually tells you something. Last week, we actually held the level, the 50% level, as a resistance. This week, we tried to break above it. And by the close of last week, we see that it held. Deep breath. Strong opinions weekly held. I have a strong opinion that this was all the pullback that we were going to get. This is evidence to me that we have held a resistance. This makes the upcoming week all the more important. We could very well see a retest of the lows because we held this resistance. It's very clear to me based on the close and where it happened. Nasdaq, it also, the week before, held its resistance even more firmly. And so there's your another confirmation. It makes sense in tech-heavy stuff. We can look at the VIX for a little bit more insight. So this was the move that we sustained in volatility, and we're using the VIX to kind of get a sentiment indicator of the fear that's in the market. From the January high in the stock market, which would be a low in volatility because they're inverse, and then this correction that we had brought the VIX up to close to 39. The halfway point of that is about 2760. Friday's move on the Russia FUD was enough to push it up, but not quite break into the rising volatility area that I would see above this 27, 28 level. So this is not really giving us a clear signal yet, but I'll be watching this very, very closely. There's a little bit of interesting price action that I want to dig into in the S&P futures, or just the market in general, that happened in the Thursday and Friday of this week. Now, the meta, the way you play the game in a bull market is bull markets discount all bad news. In other words, if bad news comes out, bad earnings come out, anything bad, the market just goes up because it's bullish. It doesn't care. Bull market don't care. Market cared this week. You had a bad CPI, bad as in it showed that inflation's a little bit higher than people were actually expecting, come out on Thursday, dropped the market in the pre-market. You had a rally in the morning, but never really recaptured the high. Then one of the Fed governors stated his opinion that he thinks that interest rates should go even higher than is currently planned this year. And that was enough at about 12:45 that day to drop the market even further. Then you had the Russia FUD, Russia invading Ukraine FUD, and that was enough to tank the market some more. The market is responding to bad news. It's not discounting it. That is not what a bull market does. And so we can infer from that bad news that comes into the market is going to have an inordinate effect on the downside. So going into this week, I am actually going to come in with a bearish bias. And we'll see how that changes as the week goes along. So that's stocks. Gold. A lot of people wanted me to look at gold this week. I noticed there's a little bit of a discrepancy in the futures, which I normally use when it comes to looking at the commodities this week. So while I see this bar on gold, which looks like a false breakout to me, on the closer time frames, it looks like a confirmed breakout. I think that has something to do with the contracts, because it's basically using different contracts to see. So we may need to see the open coming up in a few hours to see if this is really true or not. The same thing happened with oil, where on oil, which we were able to pick up a long on at the retest of this range. Oil, by the way, levels wise, I've been looking at this to get back up to 100 a barrel. I think this run that we have, which is currently at about 93, 94, I think 100 is where it's going. There's not that much reward in there unless you can dig down and find short-term trading opportunities like we were able to pick up this week. It's very hard to stay long. And so we just happen to be in the position to capture this Russia FUD that drove it higher. But really and truly, this is why I like to do this sort of analysis, because I'm looking at 100 as where the target for oil needs to be. That gives me the idea going into the week, when a lower time frame, lower risk opportunity happens, that I can get into it with the confidence that I'm with the trend. Now, if I just threw an order out there aiming for 100, I could endure a pullback. That's why it's critical to just know where you're going, know what the strategy is for the week, but then tactically look on each day for opportunities to express that strategy. And so this is really part of the general oil going to 100 strategy that we happen to get in on Tuesday. So going to hold on to that, see how the week develops. And that is oil. The dollar, interestingly enough, still hasn't really moved all that much. It really hasn't broken out in any kind of meaningful way. If we look at the weekly, it's still kind of caught, but it is kind of trying to get on the bull side. People actually want dollars. So not much change there. So those are the main things that I wanted to look at this week. I want to be bearish on the market for a possible retest of the low. And on Bitcoin, I want to wait and see what happens. Still being patient. But right now, I am positioned in hedges in cryptocurrency. And that's where I stand, and that's where I will stay for now. Look for more videos coming out this week, and next week. I'm positive that this week is going to be interesting and there'll be more to talk about. So, trade wisely, guys. We'll see you in the next video.